Everyone keeps asking the same question. Is Dubai real estate market going to crash in 2026 or is it about to explode? Some people are waiting for a collapse, others think prices will double again overnight. But here's the truth, and this might surprise you. 2026 is not about crash or boom, it's about a reset. Reset of cycles, reset of buyer behavior, reset of where the money will be made. And if you're still looking at Dubai like you did in 2018 or 2021, you're already late. So in this video, I'm going to break down what the numbers actually are saying. Who is really buying property in Dubai today? Why government planning matters more than the hype that you see around? Which areas are likely to boom and which areas might cool down in the coming year. So let's start with what most people completely misunderstand, and that is the numbers. Let's talk data, not opinions. Dubai population is growing faster than its housing supply. Every single year, thousands of people move to Dubai, and these are skilled professionals, these are entrepreneurs, these are remote workers, these are families who are looking to relocate to Dubai, are long-term investors, because these are the people who would stay there. And this is not a short-term tourism, this is a permanent migration. Now, here's the key point people miss. Even with all the cranes that you see, new housing supply isn't keeping up with the population growth. Yes, projects are launching, yes, towers are being announced, yes, those are getting sold out, but the supply is still 15% shorter than what demand is. And when demand is consistently higher, markets don't collapse, they stabilize or they rise gradually. Crashes happen when the supply is more than the demand and buyers disappear. That's not what's happening here in Dubai, and this trend isn't slowing down. Dubai is positioning itself as a global business hub, a tax-efficient base, a lifestyle destination, which means people aren't here for a flip. They are coming here to stay. And that is the biggest shift no one is talking about, which is who's buying now. So let's talk about buyers, because this is where everything changes. In the past, Dubai had a reputation: fast money, speculators, people buying off plan just to sell 6 months later. That's what made the market volatile. But today, around 70 to 75% buyers are end users, and that is massive. These are families buying homes, professionals relocating, business owners setting up long-term bases, investors focused on rental yield and not quick flips. But why does this matter? Because end users don't panic sell. They're not exiting because prices paused or the market slowed for a quarter. They live there, they rent it, they hold it, and this completely changes the market behavior. It doesn't mean prices only go up, but it does mean crashes become far less likely. Instead of sharp booms or busts, you get microcycles, area-specific performances. You can see a selective growth, which brings us to the most important shift of all. And that is about Dubai, which isn't hoping for a growth, it's engineering it. Here's where Dubai is fundamentally different than most of the cities. Dubai doesn't wait for a growth, it plans for it. 2030 or 2040 vision are example of it. The executions of roadmap, we're talking about new free zones, aviation and airport expansions, logistic hubs, smart city infrastructures, tourism mega projects, entertainment districts. These are all part of Vision 2040. And historically, Dubai has proven one thing again and again: infrastructure creates real estate value. Look at last 10-15 years. Areas near new metro lines, business districts, master plan communities. They didn't grow because of the hype. They grew because people needed to live and work there. So when people ask, will the whole market crash or explode in 2026? They are asking the wrong question. The real question is, which areas will benefit from the next phase of planning and which won't? And let's break down this point a little more in detail. Let's look at the booming areas in 2026. The strong performance you can expect from areas which are newly master planned communities, areas with integrated schools, retail, healthcare, and leisure. Locations near upcoming transportation hubs might also see a boom in the demand. Districts aligned with new economic zones also can expect a higher demand. Now, these areas attract families. They attract long-term residents. You can see a stable rental demand there. And we are already seeing strong interest in waterfront developments in emerging zones. Communities designed for living, not speculations. These aren't overnight flips. These are 5-10 years wealth builders. Now let's look at the cooling areas in 2026. Now let's be honest, not everything will keep rising. Some older development in oversupplied district, saturated apartment clusters may see a slower appreciation or flat pricing, or you can say longer resale timelines. Now this doesn't mean a crash, it means a selective slowdown. And this is where inexperienced investors get hurt. They buy based on the hype and not fundamentals. And these are the few biggest mistake people will make in 2026, which is treating Dubai like one market. Dubai is no longer buy everywhere and win, but it is becoming buy right and wait. Marketing will be louder, promises will get flashier, launch events will look like more glamorous, but fundamentals will matter more than ever. Ask yourself, would people want to live here without incentives? Is there real demand or just investor demand? What will happen if prices pause for 18 months? Now, these are the questions you should be asking. The next winners won't be the obvious to everyone. So what you should be actually doing today? Number one is you should be focusing on fundamentals. Avoid hype zones, especially limited time offer. Just avoid those. Think long term and not short term. Diversify your portfolio in different locations. So no, Dubai's real estate market is not about to crash in 2026. And no, it's not going to explode everywhere either. 2026 is about separation, smart money versus emotional money, planned growth versus speculated hype, data-driven decision versus fear-based decisions. Winners won't be the loudest, they'll be the most prepared ones. Now here's the real question. Are you positioning yourself for the areas that might slow down or for the communities that could outperform expectations over the next cycle? If you want clarity, real clarity on which areas have the strongest fundamentals, connect with me. I will walk you through the data, the trends, and the opportunities that actually make sense so you can invest with confidence and not the guesswork.